Hi guys, today's our Daily Horizon View. The date is the 1st of the 5th, 2019. And as always with these, we're looking at the ASX Exchange Traded Funds. Today's spotlight is CRED. That's a BetaShares Australian investment grade corporate bond ETF. I think this one's actually quite exciting, so stick around. That's quite a new fund, but if not, just skip to the end and have a look at it. I think it's well worthwhile. Our overview today, we had the market was up 0.75%, closed out at 64.66. We had information tech, financials, industrials, energy, communication services, healthcare, materials, real estate, all up. Gold and silver were on the upside. West Texas Intermediate crude oil was down. The rest of the commodities were mixed. Let's run through the top 5 percentage rises. We had ETF, REIT, GEAR, OZF, and EMKT. ETF is the UBS IQ Morningstar Australia Quality ETF. We had a percentage rise of $2.19%, dollar value of 46 cents. We had a volume of 2,500 shares traded today. Not too bad of a volume for these small ETFs. Just have a quick look at our top 5 percentage falls. We saw ETPMPM, ETPMPT, GDX, Bear, and Cure. So ETPMPM is the ETF's physical precious metals basket. That one is backed up by physical allocated precious metals, and they're held in the HSBC Bank in the States. So we saw a fall of 1.78%, which equated to $2.60 on a very slim volume of 49 shares traded today. So those ETFs aren't that liquid. Top 5 dollar rises. We saw IHVV, IVV, SPY, IHOO, and BTS. We saw IHVV, is actually the iShares S&P 500, and that's hedged to the US dollar. So that one tracks the index composed of large cap US equities. So that one's got about a market cap of 166 million. You get a little bit of a dividend yield of 2.81%, and that one is gold rated by Morningstar, so they tip that one up as a good one to invest in. Up $3.78, percentage rise of 1.03% on a volume of 300, so that's quite a low volume today, only 300 shares traded. That top 5 for the dollar falls, we saw ETPMPM, ETPMPT, IJH, IHEB, and IHHY. So we won't spend too much time on this one because we've kind of already gone over it, but low volume of 49 shares traded today, which is nothing to see here. Those precious metals ETFs are quite small. Top 5 number of trades. Expect to see some of the big guys in this list: VAS, STW, VAP, IAF, and CRED. So VAS, for those who may be interested, that is the Vanguard Australia Shares Index ETF, and that one tracks the S&P ASX 300. We saw a 235 trades today, Mostly I'd say on the buy side, because the share price is up marginally, 61 cents or 76%. Additional three quarters to what STW is trade's gone through, sorry. So our top 5 for volume: IOZ, FAIR, STW, QRE, and CRED. IOZ, for those who may have forgotten, is the iShares Core S&P ASX 200 ETF. That one tracks performance of the top 200 shares listed in the Australian index. So that one's about a market cap of $1.2 billion, and you'll get an interesting little dividend yield out of that. At last estimate was 4.15%. So if you're looking for some yield, that might not be a bad play. Volume-wise, we saw 314,300 shares traded. Not too bad for volume. Top 5 for value, we saw STW, VAS, IOZ, FAIR, and IVV. So overall, low volumes through the market today, so you don't really expect to see a lot of value attached to that. STW was up marginally at 41 cents, and that was a 0.7% gain. We had $10.1 million of that stock trade today. Nothing spectacular. Let's move on and have a look at our spotlight, which I think is actually quite interesting. This one could have potentially a high quality ETF, and that's CRED, and that's the BetaShares Australia investment grade corporate bond ETF. So just a quick overview. The fund aims to track the performance of the index after fees. Provides exposure to portfolio of investment grade Australian corporate bonds. The fund strategy will preference securities offering superior expected returns over the Australian government bonds. So looking for a high yield. So the main aim is to provide attractive income distributions paid monthly, which is great to hear. Also combined with the compelling portfolio diversifications, gives you the benefit of diversification, I should say. Selecting bonds based upon expected returns rather than debt outstanding. CRED's index methodology seeks to avoid shortcomings of traditional debt-weighted indices and provide relatively high returns, which is what you want. Money in your pocket. So the portfolio is comprised of senior debt, fixed rate, investment grade securities domiciled in Australian dollars, issued by companies listed on the ASX and other eligible entities. So there are some foreign bonds in the list, and we'll see them later. So the eligible bonds must have amounts outstanding of at least 250 million and a term of maturity between 5 to 10 years. So there's up to 35 bonds selected from the eligible universe. So with each bond assigned an equal weight as at each rebalance date. So when they rebalance the portfolio, no single issuer shall have a weight in excess of 7% on each rebalance date. So that's to keep the diversification intact and defensive qualities of the ETF. So let's have a quick look at the rest of the info here. So we had a net asset value of 26.41, closed just above the net asset value of 26.36. A very attractive management fee here per annum of 0.25%. As mentioned before, you get a distribution monthly. And I had to actually calculate a rough dividend yield here, so be very wary of this. This is not 100% accurate. I had to make some assumptions in that, and I came out at 3.78%. But as I said, that's a bit of caution there. As mentioned, this ETF actually does have a short track record. So it's been up and running for less than 12 months. Date of inception was the 31st of May last year. However, on the face value, the ETF appears to be performing well due to its selecting high quality bonds and using the expected returns methodology. This ETF, in my opinion, would be one that I would consider using in an income-focused portfolio, mainly because it has very low expenses and it pays a monthly dividend. And also, I think the risk profile of this ETF is actually quite good. So it definitely could quite possibly, as a quite a good one to include in your own portfolio, managing risk and also generating some constant income. As always, you definitely want to do some more research. So there's a couple down the bottom here to compare it to. So IHEB, VIF, BNDS, and IGB. But I think this one's definitely well worth a closer look. So yeah, monthly, but yeah, as mentioned, please be careful of the dividend yield because I had to calculate that myself. Quick overview, performance since inception hasn't been too bad. It's only been running just under 12 months, so you got 8.16%. Quick overview of the top 10 holdings: MetLife, AusNet Services, Ausgrid Finance, Horizon Networks, another AusNet bond there. We've got Caltex Australia, Telstra, Emirates, BP, and also AT&T. So that's it. It's not just Australia focused, so you've got a little bit of diversification in the bonds of the holders, which I think is another tick for this little product anyway. As always, it's informational. Just try to be as factual as we can and give you the information for you guys to go and do some more research. Trying to give you the information to be able to crack your own financial sky, build your confidence, more information on what products are out there, because it's researching these things can take time. And give us a thumbs up, give us a subscribe, and yeah, if you've got any comments, feedback on the videos, anything you'd like some further research completed on, just leave us a comment. I'm happy to follow up on anything that you guys come up with. Ciao.